Welcome. Today, we are diving into a really important part of UAE tax law that, let's be honest, can be a bit of a head scratcher for a lot of businesses. We're talking about the domestic reverse charge mechanism. So let's get into it and figure out exactly how this whole tax switch really works. All right, to get us started, I've got a little puzzle for you. Picture this. A business sells a gold bar to another business. Then another company sells a bottle of cleaning fluid, also to another business. Seems simple, right? But for VAT purposes, the UAE treats these two sales completely differently. One of them triggers a special rule and the other doesn't. And by the end of this, you're going to know exactly why. So here's how we're going to break it all down. First, we'll get our heads around the main idea, this concept of flipping the VAT switch. Then we'll look at the specific rules for gold and for hydrocarbons. After that, we'll circle back and solve our little puzzle. And finally, we'll talk about why getting this right is so important for your business. Okay, first things first. We need to understand the fundamental concept here. At its heart, this whole mechanism is really about one thing: flipping a switch on who is actually responsible for handling the VAT. This right here shows that flip perfectly. On the left, you've got your normal, standard VAT flow. The seller charges the VAT, the seller collects the VAT, and the seller pays it to the government. Simple. But look at the right side. Under the reverse charge, that entire responsibility just flips on its head. The seller doesn't charge any VAT on the invoice. Instead, it's the buyer who has to calculate what's owed and pay it directly to the government. It's a total switch. So here's the more official definition. The reverse charge mechanism, or RCM, is all about shifting that accounting responsibility from the seller over to the buyer. And the key phrase to remember here is self-accounts. The customer is basically wearing two hats in their own tax return. They're acting as both the supplier and the recipient. Okay, so we've got the general idea down. Now let's get into the specifics. How does this actually apply to a major commodity here in the UAE, like gold and diamonds? The rules are incredibly precise, so you've got to pay attention. For this reverse charge to kick in on a gold sale, and I mean all three of these conditions have to be met. 1, the buyer has to be planning to either resell the gold or use it to make something else, like jewelry. 2, the buyer absolutely must be registered for VAT. And 3, they have to give the seller a written declaration confirming all of this. If any one of these is missing, it's a no-go. And this brings up a really crucial point. The pressure is on the seller to get this right. The reverse charge does not apply if the seller skips their homework. They have a duty to check and verify the buyer's VAT status. If they don't, or if they just turn a blind eye when they should have known better, then standard VAT rules apply. Oh, and also, a recent change since 2023 means that any related services, like say the craftsmanship on a necklace, get billed separately with standard VAT. All right, let's switch gears and look at our other big category, hydrocarbons. You'll see the logic is pretty similar, but the details that matter are definitely different. Now, before we even look at the rules, we have to lock in this definition. The most important word here is pure. The law is crystal clear. The reverse charge only applies to things made only of hydrogen and carbon. That's it. Remember that word, pure, because it's going to be the key to solving our puzzle later on. And just like with gold, we've got a clear checklist. The product has to be crude oil, natural gas, or one of those pure hydrocarbons we just talked about. It has to be a business-to-business deal, and both parties need to be VAT registered. The buyer's intention must be to either resell it or use it to produce energy. And you guessed it, the buyer has to provide that written confirmation to the seller. Again, every single box needs to be ticked. All right, we've covered the rules for both gold and hydrocarbons. We now have everything we need to go back to that puzzle from the beginning and solve this thing once and for all. So here's our first scenario again, a B2B sale of gold. The buyer is a registered business, and they're going to use that gold to make a necklace that they will then sell. So, what do you think? Thinking back to that 3-point checklist for gold, does the sale tick all the boxes? Yes. Absolutely. The gold is being used to produce another item for resale. It's a B2B transaction. And we're assuming the buyer provides the proper declaration. All three conditions are met. So the VAT responsibility flips to the buyer. The seller sends an invoice with 0 VAT on it. Case closed. Okay, now for the second part of our puzzle. We've got an energy supplier selling cleaning products, and these products contain some hydrocarbons. What do you think? Does the fact that there are hydrocarbons in the product automatically trigger the reverse charge? And the answer is a big, clear no. And this is exactly where that specific definition becomes so important. Remember, the RCM only applies to pure hydrocarbons. A cleaning fluid that has other chemicals mixed in is just not a pure hydrocarbon, so the mechanism doesn't apply. The seller just charges standard VAT like any other normal sale. And there you have it. Puzzle solved. So we cracked the case. But let's zoom out for a second and talk about the big picture. Why is getting this stuff right so incredibly important for any business operating here in the UAE? Let's boil it all down to a simple checklist. First, know what you're selling. Is it even eligible for RCM? We're talking about very specific things like gold and pure hydrocarbons. Second, if you're the seller, the burden is on you. You have to verify the buyer and get that declaration in writing. Third, be crystal clear about your role. Are you responsible for the VAT, or has that responsibility flipped? And finally, and this is the big one, remember that getting this wrong isn't just a minor slip-up. It can lead to some serious tax penalties. So the next time you're involved in a deal with these kinds of goods, just ask yourself that simple question. Who's supposed to flip the VAT switch here? Whether you're the one selling or the one buying, knowing the answer isn't just good practice, it's everything.